Good afternoon, everyone. It's Ali Corbin-Shreve here with a breakdown of the action for Thursday, January 4th, where we saw the indexes get hit by some late session selling, Ken.
Yeah, we had blue chips outperforming for a good part of the session. Nasdaq, S&P really didn't do much the whole session, but yeah, sellers came into the market. Take a look at three stocks though, a couple of financial stocks: Fifth Third Bancorp in the regional banking group, also investment manager Apollo Global Management, APO is the symbol there, and then finally Novo Nordisk, which made a nice move today.
Yes, it did. And we'll get to those three stocks. But first, let's take a look at the major indexes. The NASDAQ today down almost 0.6%, while the S&P 500 lost 0.3% on the day. The Russell 2000 was fractionally lower, and the Dow, as you said, outperforming just fractionally higher on the day. So now we are seeing a pileup of down days here, Ken, and the index here, the NASDAQ, losing further ground versus the 21-day.
Yeah, I mean, headed into today, the Nasdaq showed two straight declines of at least 1%. So we're seeing some distribution on the Nasdaq and some mild distribution on the S&P 500 as well. So the calendar turns to 2024, and indexes look a little vulnerable here after big gains in 2023, and the start of the year have seen a lot of growth stocks, a lot of the big winners in 2023, sort of profit taking, maybe some tax selling. So the Nasdaq looks a little vulnerable here. It lost its 21-day line, closed near its low again today. So I suppose that raises the likelihood of a possible pullback to the 50-day moving average here, which you see is just above that 14,000 level.
Right, exactly. Obviously, with how strong the market was in November and December, it would have been nice to see that 21-day line continue to act as a support level. But putting the declines in the context of the super performance that we saw in November and December, I mean, we were saying how stretched the indexes were getting from their moving averages. So from here, Ken, ideally, what would you want to see?
Well, I think if you'd like to see downside, if we do continue to head lower, you don't want to see expanding volume to the downside. We've seen a little bit of that so far in January. Then you also want to see your leading stocks start to firm up a little bit. So again, the big winners, whether it's the Magnificent Seven stocks or other big winners in the software and semiconductor space, they're probably ready to just pull back and digest gains a little bit. So, a pullback is fine. Remember, we were up 9 straight weeks headed into this
Right.
week, so that's a pretty significant win streak. So we come back here, and I think the weekly chart for the Nasdaq provides good perspective because we're going to really see if that 10-week moving average, the red line there, holds. That's a key support level, and we'll see if it tests that line and buyers come in and offer support. That's still a question mark right now.
Great. Okay, well, let's take a look at the S&P 500 as well, breaking its big winning streak so far this week as well, with one session to go in the shortened trading week. And we're seeing the S&P right at its 21-day line here.
Yeah, so maybe looks a little bit better than the Nasdaq because it's holding above that short-term support level. But nonetheless, we did get some selling late in the session today, and that was after 3 straight higher volume declines for the S&P 500. So, mentioned on IBD Live this morning, the percentage declines for those 3 distribution days, Friday, Tuesday, and Wednesday, they weren't really big percentage declines. So the distribution days on the S&P 500 really don't have the feel of major institutional selling. So to see the S&P 500 kind of holding support here, it looks vulnerable, because it made a nice bounce off the 21-day line today, but it gave back a lot of that gain by the close.
It sure did. And now let's take a look at the Dow continuing to hold up pretty nicely here. What do you think, Ken?
Yeah, had a decent gain earlier today, but you can see it closed all the way down near its session low, but arguably holding up the best here. I think the Dow has outperformed pretty much every day since the start of the year, and we've seen healthcare stocks like Merck and Amgen outperforming in the blue chip index. So I think when you look at the Dow and the S&P 500, this kind of looks like a normal pullback, but again, we're just at a point where the indexes and a lot of leading stocks probably deserve a little bit of a breather here.
Exactly. So let's take a look at the Russell 2000 and really seeing the selling pressure here as of late. Of course, more so yesterday than today.
Yeah, I mean these are some pretty sharp declines in the small cap index, and that definitely has a slightly different technical look here. You see that 10-week line for the Russell is pretty far below the last breakout area for this index. So I think the most vulnerable indexes right now certainly look to be the Russell 2000 and the Nasdaq Composite.
Exactly. And let's check in on the 10-year yield because this may have had to do a little bit with the selling pressure on the equity front today, Ken, with the 10-year yield getting back up to that 4% level.
Yeah, and I think it was economic data before the open that fueled this rise in interest rates. You had, let's see, the ADP private payroll report. Private employers added many more jobs than expected. It was a very strong number. Jobless claims, on the other hand, were weaker than
Yeah.
expected. So, and this all comes ahead of a key employment report tomorrow morning at 8:30 a.m. Eastern time. So the Fed is still monitoring economic data. The jobs data this morning was strong. Make no mistake about it. The Fed wants to see kind of soft jobless claims. They want to see soft job growth, but the job market remains strong here. So we'll see what the jobs numbers look like tomorrow.
Okay. And a few quick ETFs to check in on before we take a look at those stocks. So here's a look at XLF in the financial sector, up on the day, but of course closing off highs along with the broad market, but up 0.4% here. So does this seem like one of the areas that's holding up better than most right now, Ken?
Definitely. I mean, it's been a very powerful move off lows for XLF, and next week, really, we kind of mark the official start of earnings season. We've got Bank of America, Citigroup, J.P. Morgan, Wells Fargo, all reporting a week from tomorrow. So next week on Friday, we get a slew of financial earnings reports, but it remains a nice pocket of leadership in the market here.
Okay. And similarly, adjacent to the XLF ETF, we have KRE tracking regional banks, which have been pulling back lately, but just a little bit and finding support at the key 21-day line.
Yeah, coming off a nice accumulation phase here. This is the regional banking ETF. I like the low volume pullback down to the 21-day line. And when you look at a lot of the charts of financial stocks, whether they're ETFs or individual stocks, you really not doesn't really look like a market that's all that unhealthy right now. It's the charts look pretty good. So KRE making a nice stand at its 21-day moving average, and I'm really interested to hear what the financials have to say next week, and if they're going to be able to fuel more gains for this sector. We'll have to see.
Right. And let's also take a look at XLV because, as you mentioned, healthcare stocks definitely an area to watch for outperformance, up about 2.1% so far for the week. And we do have the JP Morgan Healthcare Conference coming up next week.
Yeah, I think that starts January 8th, January 9th, something like that. So probably see a lot of headlines out of the biotech area. So could be an interesting week for healthcare stocks as well. But they certainly have gotten the year off on the right foot here. So maybe healthcare stocks are ready to lead the market this year.
And so, speaking of healthcare, let's take a look at InVio because this was definitely a medical sector standout today with a 3.9% gain in heavy volume. And you want to contrast that with LLY to see a downside reversal today for Eli Lilly after an attempted breakout. So, InVio, that competitor here, looking pretty good in comparison, at least today.
I was when I saw that reversal in Eli Lilly, I said, "Oh, let's go to NVO," and I was surprised to see the stock still held up pretty well. It was a good heavy volume breakout today out of a base, a nice gap up with some volume. There was some small news for the Danish drug maker. Obviously, they've been kind of rising in tandem with Eli Lilly because Novo Nordisk makes the Wegovy and Ozempic weight loss drugs that are very popular right now, but the company actually signed a research and collaboration agreement with a small company called Omega Therapeutics and another privately held company for obesity management. So OMGA is a low price stock, but that was up 100% today, close to 100% on the news of sort of a pact with Novo Nordisk. So good to see NVO, the breakout work nicely today, even though Eli Lilly reversed
Mhm.
lower. Not a great day.
Yeah, and the leaderboard team was all over this breakout today, right, Ken?
Yeah, we've been pretty heavy weighted in tech, and it's our first healthcare exposure. So we're gonna keep an eye out on the sector and see if there are other opportunities here.
Sounds good. And then in the financial sector, let's start with FITB, Fifth Third Bancorp here, up 1.3% on the day, consolidating nicely after a big run in November and the first little bit of December there.
Yeah, I mean, another reason to be optimistic about the market here. Another reason to just not say that this this uptrend that we're in is just doomed to fail. I think a lot of financial stocks look pretty good here. The fundamentals, it's still tough to kind of wrap your head around. A lot of them are still showing declining earnings and sales, and the estimates don't look great. But again, next week we'll kick off earnings season with a bunch of financial reports. But this is, for a technical look here, FITB is showing very bullish technical action. It's still holding on to that strong accumulation distribution rating of A minus, and it's just been kind of pulling back in light volume here. So really picture perfect price action.
hmm And if it can close tightly this week, we might have a 3 weeks tight on our hands, Ken.
Yeah. I think the price action is definitely setting up an alternate entry here.
hmm Okay, we'll keep tabs on that. And then lastly, let's take a look at APO. We got an upside reversal in Wednesday's session, and then following up on that today with a gain of almost 3% in above average turnover.
Yeah, this stock actually held up relatively well. I think I'm just going to check it. Yeah, closed just in the middle, in the upper half of its range, which is a positive sign. So stock rose was up close to was up more well over 3% early in the session, but got kind of pulled down late with the market. You noted that that upside reversal yesterday, and then the stock moved very well above its short-term moving averages today with good volume. I think the weekly chart still has a very good look here, and it looks to me like a stock that's still in a buy zone here.
Okay. Well, thank you so much for that, Ken. And thanks everyone for tuning in. That is it for today's show, but we will be back with more tomorrow morning on IBD Live. And we hope you join us, where we'll be joined by two of the co authors of the book, The Life Cycle Trade, Eve Bobach and Kathy Donnelly, for a fun discussion about what they're looking for in the big winners of 2024 and how they are handling this current market pullback. So join us, investors.com/IBD Live, for all the details on that tomorrow morning, starting 10 minutes before the opening bell. We'll see you there. And we'll also see you right back here after the close to wrap up the week.